My name is Shalu Atwal. I'm an attorney at Morrison and Foerster, or as we like to call ourselves, MoFo. I've been working in the startup space for about 5 years now, initially in Canada, and then I made the move to San Diego about a year and a half ago. Part of that move was motivated by wanting to be closer to the hub of venture capital, but also honestly wanting to be close to the ocean and having more sunshine in my life. I have to say, without a doubt, the most rewarding aspect of my life is working with founders, especially female founders. As a startup lawyer, I consider myself as in-house counsel for our clients, and also an integral part of their team. So with Clara, I met her when the firm was representing her at the company that she was at previously during a fundraising round. And I've been a fan of hers since seeing her in action firsthand ever since. I'm really excited about this new venture for her. I'm excited about having discussions around the unique position and issues that women face as founders, as investors, and also about bringing a community of like-minded people together. So thank you for coming out today. And I'll turn it over to Clara.
Thank you all for coming so much. And thank you, Paul, Shalu, and Morrison Foerster for sponsoring this happy hour with me. You guys have been fantastic allies for me throughout my career, and I could not be more grateful. So thank you. I am Clara. I have spent 17 years in finance in various capacities throughout my career. First as an investor at JP Morgan, then as a banker at Credit Suisse, and then as a 2X COO, the first executive hire at a fintech startup, Forge Global, that I took from Series B to SPAC. And then I took my second startup, Equity, from pre-product to Series A. And so I have, in my career, enriched hundreds of men. Hundreds, and like 4 women maybe, right? So after having done this, and after taking a step back and saying what I really want to work on in my career, I said I would like to enrich women now, please. And that was the genesis of my company, 32 Cents. We'll talk about that in a second, but this happy hour is actually about a broader subject because 32 cents is the gender wealth gap. So for every dollar of wealth men have, working men, that is controlling for women who are not in the workforce, women have 32 cents to that dollar. There are many, many, many reasons why that's the case. And one of the reasons that we're going to talk about here is parity inequity, especially in the startup world. So with that, I will start doing this. So yes, as we talked about, the gender wealth gap is 32 cents to a dollar, right? The wage gap, which is the number that you'll see everywhere else, like the more common number, is 89 cents to a dollar. But that masks kind of where real compensation and wealth building takes place. That really masks differences in bonuses, variable compensation, and investment and equity, because your salary represents your lifestyle, but your equity represents your wealth. And most of the equity studies that are done by venture capital firms, by watchdogs, by companies self-reporting, all of those studies really focus much more on the top line of salary and less on the idea of equity being still a pretty significant difference in equity. And so we're here to talk about that difference. So effectively, women own 47 cents to a dollar of the equity owned by men for the same position in a startup. Carter did a study on this a long time ago. And basically in 2018, there was this study that said women owned half the equity men owned for the exact same position. Women make up 35% of equity holding employees, but only 20% of the equity itself. And that's because, the reasons are multifold, right? No one wakes up one morning and says, today I will discriminate against women. That's not how this works, right? No one wakes up and says that. Let me talk you through exactly how I ended up with a insanely low equity stake in my first startup, Forge, right? And I'll tell you kind of how the genesis of some of this gap happens. So at Forge, I joined them as the first executive hire. Now, the Forge founders were a very young founding team. They built a rocket ship. Forge is a marketplace for secondary equity. So you can buy and sell pre-IPO companies on a marketplace on an exchange. So it's designed to help founders get liquidity, and it's designed to help investors get exposure to pre-IPO stock. The founders at Forge were 25 years old. They were very busy. They were very young, two young men, right? They had built this, like they had insane demand and they needed to hire someone to help them just take that load off. They had no time to do a benchmarking exercise in compensation. They had no time to do any analysis. They just said, well, we kind of think this role is worth, worth 0.2%. And they didn't come into this conversation with me saying, I'm going to screw Clara over. They came into the conversation saying, we have no idea, so we're going to pick a number and we'll see what happens. Clara came from banking with no real ties to the startup world. I didn't know anyone that I could ask this to. I had no idea what I was worth. So I just knew at startups, you get equity and you get a lower salary and you take that salary decrease to get more equity going forward. I just had no idea. So I walk into the same room with these guys and they say, well, we'll pay you 150K and we'll give you 0.2%. That's often all you get if you walk into a startup and want to get a job. They will give you a salary and they'll give you an equity percentage or a number of shares. Now, benchmarking that and knowing what that actually means is really hard because data sources just don't exist. If you don't have a network in startups, you don't know whom to ask. If you don't have friends to go bounce this off of, you have no idea where to go. I had no idea. So I said, well, that sounds reasonable, but I valued cash. As an immigrant woman, I valued cash, right? The way I grew up, we basically made money, saved money, bought a house. Those were the three things that I was told to do, that my parents and that my grandparents did. Get money, save money, buy a house, right? So I didn't realize what equity was actually worth. And so what happened was I ended up with 0.2% of the company as the first executive hire. That is probably an order of magnitude below what I should have gotten, right? But no one in this conversation was evil. Both of us went into it equally time-starved, equally naive. And we ended up in a place where someone else who knew better, a man who knew better would have, and they did, end up negotiating significantly more equity than me. That's the anatomy of how most of these things happen. In good faith, lack of time, and naivete. But that often leads to conversations like, when Forge went public, I ended up with $100,000, which is less than my first year associate bonus. I feel very clear. The more we talk about numbers like these, the smarter we all get, right? My peer, someone hired at the exact same time as me, heading sales, had an outcome of $900,000. That's the equity gap in action. I have no shame over telling you guys this, and that's how we actually all get better. Transparency, talking, discussing these numbers publicly. Secrecy in wages and secrecy in equity and secrecy in compensation benefits no one but the employers. We have to all talk and help each other do better. What I've always done is anyone else that I've helped to gain who has a job in a startup, I always say, let's go, let's benchmark, and let's figure it out. Let's maybe walk into some of the more pragmatic ways about how to do this, right? 5 years ago, when I joined Forge, there were no tools to help you benchmark anything. Not really. Now there are tools like Pave and PitchBook, which actually help you benchmark startup salaries very, very precisely. So we're actually working with Pave, Pave is a pay-to-play company, whereby if you as a startup give them data, they will then include your data and give you free access to payroll information and benchmarking information across all roles. So you can basically go in there and see, as a senior director of partnerships at a Series A startup, what should I be making at the 25th, 50th, and 75th percentile? Going into a negotiation with that information can be super, super critical to actually getting the right outcome. Just knowing where to go, how to ask, etc. So I'm going to pause there briefly for questions on what I've said so far. I've talked a lot. Any? Yes?
At what moment did you realize, oh no, what am I not?
I mean, look, I didn't realize for a while, right? Because no one talks about this. So I worked my merry way for 3 years until I did their Series C financing, when I, as COO, got to see their entire cap table. And then I was like, oh, God damn it. So that was basically the moment where I was like, okay, this is not okay. I negotiated a better refresher at that time. So I did end up with that, but then I left before I could vest all of that. So the net results didn't come out super nicely, but I didn't realize for the longest time. So I was blissfully unaware, which is kind of also what happens to most of us, I think. And that's why we end up with, I was talking to this really nice investor the other day who I said, the average net worth of, let's say, a VP level person could be in the hundreds of thousands. And he's like, that's not, they have millions, right? And I'm like, no, actually, women very seldom at that level often have that kind of a net worth. And it's just, he never realized that because men are so normalized to having 3x the amount of wealth that they see that they assume everyone else does. No one, I think, here are necessarily bad actors. It's just mutual opacity, which I think shifting the veil on that is one of the critical ways, I think, to move that needle. It's a great question. I didn't know for a while. Yes.
So I'll just give
Please.
the whole thing of being transparent. So I was a chief marketing officer for a public company, and they went from 150 million to 350 million while I was there. And they kept me on contract the whole time. So I basically made zero equity from that time that I was there. And that's and again, not purposeful, because I started as a contractor and then I just ended up staying as a contractor, but I was really a full-time employee. Mm-hmm. And so I missed the entire, and someone else who got hired for less years than me, and probably the only other woman didn't get as much stock as a lot of the men. He saw it kind of later when there was a little bit of a comparison. She worked for 3 years and I think made $500,000 to $600,000 off of the equity on that. So it's just, So what I'm saying is my lesson was, be careful when you're a contractor of not letting that last too long, for making sure that even if you're a contractor in this gig economy, that you negotiate shares. Because if you're permanent or long-term.
Yes, that's a fantastic point.
Nobody thinks about that.
Exactly.
Think, oh, I'm a contractor.
Exactly. Exactly.
I think that goes back to also one of the motivations of you starting 32 Cents Inc., this idea that knowledge is power. So sharing knowledge about it. And we do focus on the wage gap a lot, but there's this idea that the equity gap, it compounds. Like you don't think about that. And we'll talk about that more, but that initial decision is going to impact your lifestyle, your financial stability going forward.
Absolutely. And 32 Cents is working with PAVE and PitchBook as we speak to make certain parts of their offering public and available to women to benchmark their job postings after they get an offer. They're usually designed to work towards companies, but we're actually trying to make it also available to women. So that's an ongoing conversation. But in the meantime, I personally, Clara at 32cents.com, use me as your resource, right? If you don't have anyone else to go to, if you don't have any circles to talk to, or even if you do, I want to bounce your next role and your next equity competition off of me, come to me. I am happy to be that resource, happy to have that conversation, happy to help you benchmark and walk into your next conversation much better armed. That's an offer I make to all of you here. What else can we do? Because a lot of us here are in the C-suite and we have agency over the compensation that we can deliver to our company. So what can we do from the other side is we can absolutely be very intentional with how we develop our own earnings and our own hiring frameworks. So instead of just succumbing to, let's quickly get something together, let's take the time and score our departments, create a framework, pull that data, make sure that we have the right adjustments in. And once we have a band, we can also say to our candidates that we don't negotiate. And tack that I've taken at Forge, that we took at Forge after I joined, that's a tack that we took at Equi. We did not let our candidates negotiate offers. And that is something that we have power to do, because we can say, look, here is the data-driven approach and a framework that we've all come up with together. It's public data, but once we have that framework, we're going to stick to that framework, and we're not going to let you go out of band, because we can be very transparent that it's for anti-bias reasons. And candidates often respond really well to that. So as hiring managers, taking that time to develop that comprehensive framework and making sure that it's data-driven is super powerful, because we can be the agents of change going forward and not approach this with equal naivete. That's a harder one, but that is something that I think that I spend probably in my when I enter a company as a COO, I probably spend the first 3 months doing this work with my chief people officer, just to make sure that we have a good earning, hiring, and compensation framework. It's work worth doing if we have that influence. And like I said, we need to talk, right? Talking, finding that financial tribe. And again, that's a little plug for 32 cents later, which we'll come to, but kind of finding that financial tribe, getting all the data during a negotiation, presenting that, talking about your financial outcomes to everyone. That can really, really help lift that veil, and we can do better. You don't have to negotiate like a man. We can negotiate like a woman, because we're better, truly. Because here's the thing, right? Adversarial negotiations seldom end well. They're fine, but they often don't get us to the best possible outcome. So I've always phrased things when I've negotiated in we terms. How can we find the best path forward given this area? My favorite tactic is to go in and say, look, we are on the same side, right? We are coming in with, here is the data that I'm coming in with, right? How can we sort of find the right path together and come up with an outcome that aligns our incentives really, really well? So using we language, which I think we're all acculturated to do anyway, but we can use that as a weapon almost to like get everyone aligned, pre-aligned, and then negotiate in a much softer way, but get to the right place. So I think my favorite tactic is to lay out why I'm negotiating. I'm saying I'm negotiating because I have observed from both sides of the table gender disparities. And I'm negotiating now with you to make sure that doesn't happen here.
Literally just went through this and we'll talk about this later. But
yeah, please.
Part of me hates having to do that.
Yeah.
Or even acknowledging it.
Yeah.
And I think a lot of women, when they are negotiating, they'll say, I hate to be that, woman who's pushy and bitchy and blah, 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 but I'm going to do it because I need to. And so when you think about that, like, do you think just addressing it head on is the best way to do it? Or like, are there other ways you maybe suggest doing it? Because I don't negotiate like a man, but I hate having to acknowledge that I'm negotiating like a woman.
I think it is important to find your authentic voice, right? Whatever feels authentic to you makes the most sense. I am unapologetic about this stuff, right? Because I know that the data shows very clearly that there is a disparity. I am not sorry to be that woman who asks these questions. I am not sorry to be that person who like brings these things up. However, that is my authentic voice. I think the worst thing you can do is to go in with an inauthentic voice. So whatever feels right, I have found, I don't think it head on really makes it, puts it on the table and says, I am here, we both know that I'm negotiating, right? This is why I'm doing it. But here is a data-driven concept about why this job should be paying too much equity and as much salary. You tell me where my understanding is off here. That's how I've approached it. But I'm saying that, we can always develop your own authentic voice, is what I would say. I'm just unapologetic. I don't care. I will lay it out. Like,
one thing I would say is that, like, it's very much on your style. But so the next job I went to, I was very cautious about the equity.
Yes.
And so what I did was I actually got all my advice. My entire advice was from the lead-in book from
Love it.
Very similar. But I just got the data from an HR friend. I don't know if she got it from PAVE or she might have gotten it from one of these. But she sent me CMOs, startup companies, Bay Area, how much salary, how much equity. And I didn't say anything about gender or anything. I just went in with this paper and gave it to him while we were having coffee. Said, here's what the average is in the Bay Area and blah, blah, blah. And then I just went from there. So I didn't have to like come up with some like, I just went to him and I was like, this is what I've come up with based on this. And then that's how I did it.
Absolutely.
And I had a much better outcome, so.
Absolutely. And that I think goes to my next thing here, which is giving trust to get trust. Like you basically lay out your analysis and say, I am coming to you with this, with this, right? We're in this together. And let's both find a way that we can mutually add value. I think that phrasing to me has worked really well. But I think that is something, as you just did, right? Like you tell me where I'm off here. Here's all the data. Tell me where my understanding is off. And that often, and then like shifts the conversation into them having to explain their stance to you versus your stance to them, which is much nicer. And I also find that giving explicitly on something upfront and saying, I know this matters to you fairly well, so I'm going to give on this strategically to get something else later. That is something that I found to also be fairly effective. Always make the audacious ask, because I guarantee you, your ask is less audacious than you think it is. I guarantee you that. Like that as a baseline, I can say that. Right? As a woman, the ask that you will make will be a lot less audacious than you think it is. So if you make the ask, the worst thing that can say is no, you are good enough, breathe through it, and you will get there. But that is something I think that we have to always ask, because the worst thing that can happen is no. Even if it takes a while, just wait it out. It's nerve-wracking. I've been there. I've been waiting on an outcome, just like praying that they don't say no. They're not going to say no. They're here for you. So you can do this.
Yeah, I think also speaking to being authentic, doing the work to find out what that means for you and how societal expectations play into like what you might think is authentic. So there's power dynamics at play, and you're a woman and you're going to a man asking for something. Inherently, there's something there. But rephrasing in your mind what it is that's going on there, you're not asking for money. You're thinking, as a founder, is this the person I want to get rich with me? Take the power back. And I think finding that out. And one of the interesting things I was reading about is, I don't think it's as common. I grew up with an immigrant mom who always told me in my ear that I can do anything I put my mind to. But a lot of times as women, we're caretakers and we're part of our community, whereas men are raised as individuals, so they're risk takers. So they'll go there and they'll be audacious. So
yes,
go big or go home. Is that authentic to you, or was that trained into you? So figuring that out, I think taking the time to figure that out.
That's a great point. And it goes back to finding your authentic style. Yeah. But you don't have to put on the air of negotiating like a man. That's not necessary. Power can look very different. Power can have many, many, many variations and can be equally powerful. And so that is something that I've embraced, and that's something that I think has lent itself to good outcomes there. So there's actually I'll send this deck to everyone who's attended here. There is a model that we've built that is public to help you evaluate your equity offers that I just want to, put out there. And that's something that takes your option value, multiplies it, and kind of gives you an annual compensation. So that's a tool that we made freely available. Happy to demo it after this talk as well. But that is something that if you want this deck, if you get this deck, it's free. And it's for you guys to have a look at what your offer looks like. Some very pragmatic tools that you can ask for: shorter cliffs, shorter vesting periods, more equity for the same total compensation, because equity is wealth. Wherever you can, skew the compensation towards equity, because it will, in the end, lead. If you believe in the startup, if you believe in what you're joining, and if you join a startup, you don't join it expecting it to fail, right? So you have some measure of confidence in its growth trajectory. Skewing the compensation towards equity as much as you can really help to grow that wealth over time versus skewing it towards base, right? Can I take more equity for the same total compensation? Haircutting the last round's valuation. They'll often tell you the last round that we raised $80 million. Well, that was in 2022, early 2022. The market's gone way down since. So don't be afraid to say, hey, comparable companies are now benchmarking 30% lower, so my offer shouldn't be priced at your last round valuation. You're allowed to say that. And that can be a powerful tool for saying that my priced offer is actually lower than you think it is. So again, very pragmatic things that you can do to get more equity. Having a performance, if your total compensation number is off, adding a variable component with a performance linked evaluation, that's another tool that you can put out there. Because if you do well, we both do well, and we both get a variable compensation component versus putting it all in the base. Can I early exercise? Whenever you can early exercise, please early exercise. This is one of those things where the tax consequences are extremely stark if you don't, and it can be very, very, very empowering. So these are some very pragmatic things that you can say to someone to move the offer in a favorable direction without having the whole number raised to the point where it feels like sticker shock. Things I've used very, very pragmatically.
Yeah. And lets you get creative. So kind of going back to where it's a we process, you know
Yes.
what your end goal is. You're not focusing on the
Exactly.
valuations, ownership. So how are we going to get to this point?
Exactly. Anything that ties incentives together is fantastic. For founders as well, right? Is the round correct? And by the way, female founders get diluted a lot more than male founders do. A lot, because they have much, they're 1.9% of VC funding went to female founders, right? That's a number that's out there. So I think the statistic is that that Carta did back in 2018 was that female founders own 39 cents to $1 of equity by male founders. That was in the 2018 compensation study, and again, that comes due to dilution. And so things to think about there from a founder's perspective are: is the round correctly sized? Can you split it into tranches? Have you right-sized your ESOP pool? Are you taking on too much employee compensation? Are you taking on too much employee stock options? So things like that, just to think about to limit dilution, can also help. But obviously pushing that number up and all the associated things that come with that. Some pragmatic things. So yeah, that was formally the end of the equity presentation itself. The rest is just a 32-cent introduction, which I'm happy to go into. But any questions, anecdotes, comments, thoughts on any of this? It's supposed to be conversational, so please feel free. Yes.
I'm wondering your thoughts on, from an employee perspective, how you evaluate when you get like two different offers. And I understand that's kind of something employers go back and forth on. And from an employer's perspective, how do you give two offers that can be both equitable in the short term and medium term as well?
As an employer, how do you give someone two offers?
Yeah.
Yes. So what we did was we basically said we will benchmark according to total compensation and let the employee move their equity and their cash dials. So we gave a low cash, medium cash, and high cash offer with low equity, high equity, and medium equity. So you could trade things off to whatever part made sense to in your life, but that way you could skew the dial whichever way you wanted. So we benchmarked the total compensation number is the answer.
And as a prospective employee, is it fair to ask the question like, hey, what are most of the employees that are working at this company, which way are they choosing?
Absolutely. And the answer will likely be, a lot of in a healthy company, the answer should be a lot of people are choosing equity. That's one of the hallmarks as well. So yeah, and you have a right to ask a lot of questions. You have a right to know number of shares outstanding in the company. You have a right to know their last one valuation. You have a right to know their 409A valuation. You have a right to ask for the average equity percentage chosen by employees. You have a right to ask for a lot of things that you might not know you have a right to ask for, but you can ask for them. And to evaluate your offer correctly, you need to know these numbers. So I would ask a lot of questions. Yes. Yeah. I would say when joining a very, very early startup, right? One of the things that I tend to look for is defer the negotiation to, like, see if you can defer that conversation as well. Take an offer now, but say, let's reevaluate this offer in a year. Let's reevaluate this offer in 6 months, kind of pushing things off a little bit and saying to ourselves, this makes sense. Like, let's benchmark to a Series A valuation, for example, but let's reevaluate. So one of the powerful ways is to just push things back if you can. But I think the idea being, especially for roles, some roles also just don't benchmark well. Like engineering benchmarks really well. Things like legal and compliance in my world, in fintech, that's really hard to benchmark. So you benchmark that against sales, for example, or you benchmark that against account management, which is a different discipline. So it doesn't really work. And so that's when your anecdotal experience with your tribe and with your friend networks and your advisors comes in. So that is really hard. Both the roles are hard and the initial startup is hard. But I would say, when in doubt, put in a checkpoint in the future. That's one of the nicer things that you can do.
I hope most investors will do this, but the very professional investors will benchmark everything
Yes.
for their, so if you have influence on that, I've been pretty impressed, like Google Ventures is really good at that. They just benchmark everybody every year, all their execs, and they say it needs to be fair, so they will do that.
Yes.
I'm not with Google Ventures, I just have that experience. So I'm not like promoting Google Ventures, but I was pretty impressed that they did that. So then the people didn't have to do it themselves. They just did them, they just like, everyone needs to be, they had their whole like, guideline for that. It's nice.
Exactly.
Yeah.
Yes. Please.
I know that I need from the pay.
Yes.
I want to renegotiate. When is a good time to bring it up? Is it like 1 year? Is 1 year too early to bring up like, hey, let's revisit it. Let's like give me a refresher.
Yeah. You need to be able to have that conversation at the 1 year mark. So you start that conversation at the 6 to 9 month mark. Let me tell you a story here. Like someone that I hired in a director of finance role, he walks in the door. Day 2, he asks me, what is my path to VP finance? Day 2. So my thing being, can we do your job for a couple of days first? So that was a bit out of hand what that was. But can we be a director for a few days before we talk about VP? But that's the philosophy, right? Like he and no woman I've ever hired, smart women, talented ones, have ever asked me that once. Right? So the point being, I mean, that's a gross generalization, but I'm saying it's just a lot more uncommon. So be that guy is my point. Like, I would start the like, as in, be that guy. And the worst thing I said to him was, we'll see. But I gave him a path, right? In 2 weeks, I wrote a path down and we agreed on metrics. And then we basically gave him a path to VP finance, and he got to that path within 6 months. But he asked, and we made that happen for him. So I would start the conversation early and have it in a way that says, what milestone should I be meeting in order to get this next thing? So if you make it metric driven, it's a lot easier conversation to have, and you can hold them to it. But I would start it super early, such that on the year's mark, you get the refresher. If you start that conversation the year mark, you won't get it until 6 months later. So be that guy. He was good. Annoying, but good. Go on.
I think even like the phrasing of her question, not to pick on you, but is it too early? Once you know you're being underpaid, you're being underpaid. So immediately something needs to be done about it. And when we're talking about this equity gap and gaps in VC funding, a lot of times women aren't asking for more. we're accepting less, we're giving away more of our company. So that's part of it. And changing that, having community around us that encourages us and makes us take risks like that is really important.
Yes. No, please.
How about negotiating for a shorter 90-day exercise? Let's say in 2 years, I want to exit that position for personal reasons. So how do I negotiate that to be like maybe 1 year? I know that my base they do like 9 years. So how do we negotiate that?
It depends on what leverage you have. Like if you are in the process of leaving, what I've often done is say, I will do an X month transition of my knowledge, of my kind of, in return for, like, your notice period is you giving them your time and not taking this other job in exchange for that days of exercise, right? So when you negotiate a transition package, that's a great time to say, I will give you 3 months or like 2 months or 1 month of my time to help transition everything over. In return, I would like to have a longer exercise period. That's when that would normally come up in my experience. But that's how I would, because it's always, you can always ask, but unless you have something that they want as well, it's not going to happen. So in an employment conversation, they want you to work for them. So you have leverage there. But in a exercise conversation, well, what do they want? Well, they need you to transition gracefully. So that's what I would use to get that. Absolutely. Yes.
I would say if you're a younger woman, most of them, in my experience, they wait for their boss to see that they're great. And then they're waiting.
Yes.
And I would say, don't say you're sorry. Don't apologize. And just be a badass rock star. And if you are, then you can ask for things and you can get them. But for the guys, like my son, they just walk in there and that's what they do. And he makes so much money. It's worth like his third year. And he's already doubled his salary. You know, my daughter was waiting, and now her boyfriend wants her to negotiate her stuff. She's like, no, you have faster level. So, yeah, you have to just have that attitude. And that's what I tell the women that work for me. I said, you need to ask, but I'm the CFO, usually say, yeah, I say no.
But you have to ask.
Yeah, but if you are a badass rock star, it's a lot of people are if they are. It's like, yes, you can have that. And anything is negotiable. Anything is negotiable. Early exercise, anything. So anything is negotiable.
Just knowing what things, exactly. Just knowing what things are negotiable, right? Exactly. Everything is negotiable. Like your entire offer is negotiable. And the more creative you are, the more you can get away with almost. Like you can basically ask for things that they might not even have thought about, and you'll often get it because no one's had the time to do the math on that to figure out if it's a good idea for them or not. So
It's simple too. But if you are a badass rock star, it's like, yeah, you stay future, you did that, whatever, great. But you save that much money, whatever you did. So,
Yeah.
so
I live by the saying, if you never ask, the answer is no.
Yeah.
It's always true.
yes.
I'm going to say something which is it may sound very simple. I've been a CEO, but I'm not on the financial side. I've been a founder CEO that's approached this with a larger mission of what the company is doing. And because it was a health tech, I was very focused on the deliverance of that mission to health people. To the point that I kind of actually really did not care about salary for myself. And I felt that since I was a founder, I should defer this to make the company make more money. And in my estrogen-driven brain, that makes sense because I entered this for that reason, and I'm executing on that reason. And I'm also believing that the people that I have brought to this board and whatever are going to understand that same thinking, and so therefore they're not going to shout. So what I have learned in this last company that I did that those metrics don't apply. Right? That you can come with your own vision and your own mission, but that everybody that enters has a different mission and vision, right? So what I fail to understand is that, as unfortunately it happened that there were men on the board had a completely different mission and vision. They actually did not care anything about the vision. They did not get anything about improving somebody's life, even though they verbalized it. They cared about money, they cared about control, they cared about equity. So I just want to raise this, that there is an intrinsic difference in what drives you to do something sometimes as a woman and a man. Okay, so I think we need to recognize those differences. And I don't think I would have been different even with learning. So what I would do in future is I would put in the safeguards, knowing that I could get challenged. Okay, so that's the part that I do. But I think as we women invest in women's health, I think we need to understand that there are intrinsic differences the way women approach decision making, and it can be based on a lot more algorithm than the way men approach it. I know there are a few men here today. So I want to take that into account and I want to make it to our advantage. I want to make it to our benefit so that we invest in things for the greater good of what we're actually trying to do with regards to whatever we're investing and make it a win. That's all.
I love that. Sorry, that's my dad. Yes. No, that's a fantastic point, actually, because, and that's a great segue, actually, to, I will take the last 10 minutes of our time and plug 32 cents, if you don't mind. Because I would like to tell you about this, because it does kind of play into the other part of the gender wealth gap as well. But that's a great point, because I think what Minnie says is, women make decisions sometimes fundamentally differently than men do. And Sally Krawcheck at Elvest had this insight way back in the day. And she is one of the first people who said, listen, we just decide things differently and that's okay. And so let's build an investment product for women designed for the psychological differences in which we invest. Professionally, right, that makes us significantly better investors. The math is coming out slowly on how startups with female founders outperform, hedge funds with female fund managers outperform, mutual fund managers, female fund managers outperform. It's coming out in the data now that women professional investors invest a lot better. Personally, what that means, though, is we often don't invest in things that we don't understand and have no social proof for. And that ends up, I think, disadvantaging us. And we are often severely underinvested, especially in non-public markets. So that's the genesis of 32 cents. For me, like I said, I spent 15 years, 17 years enriching hundreds of men, 5 women, right? So for me, I said the next part of my career, I would like to enrich women. And I built this fund specifically to help women to get into non-public market assets. How we're doing that is with Morrison Foerster's help, which is amazing. We are structured as an investment club, and we come together to do 2 things. So we come together to learn from each other, to learn about how to invest, to decentralize the GP process. So everything is radically transparent. And we make investments 1 a month in every alternative asset class. If you look at the portfolios of the elite allocators of the world, like your Texas Teachers Fund or your CalPERS or your Harvard Endowment, those guys never have 1 or 2 private market assets. They have a fortress, right? They have 4 hedge funds, they have 40 hedge funds, they have 20 VC companies, they have 35, angel checks out there with an angel fund. They have all of these asset classes that lead to a diversified portfolio. We as retail investors often have trouble accessing a portfolio that looks like that. 5 years ago, I couldn't have built 32 cents because the access products that let us get down to this level didn't exist. Now they do. And so what I'm doing is I'm bringing these together and saying, we'll invest in access products and get you a portfolio for $10,000, which is an affordable buy-in that looks like something that you would get at Texas Teachers. And it's designed around a community because women tend to be like, if I have a decision to make, right, I call my tribe. That's the first thing I do. I bring my tribe together and we talk about it. Not having a tribe to talk about these things with often stand in our way when we don't know how to invest in the thing, and we sit out often. If we don't fully understand something, we have to sit out. There's a way to increase the education, increase that community, and give you a portfolio that looks truly elite in its structure. So that's 32 cents. Amrita, Minnie, they're two of them, and Aisha, they're my founding members. We have quite a few more. And I launched the fund actually, or I launched the club on January 5th. So it's basically about a month old. The interest has been outstanding. I thought I'd make my first deployment into underlying assets by March. We're doing it by February. I thought I'd fundraise by June. We're doing it by March. So we're pulling all of our timelines back. And so anyone who's interested in being part of this, please let me know. I would love to have a conversation. That's how we're different. We're community first. We have a deal flow. There are lots of communities out there that will just get you education, but they're not necessarily going to get you deal flow. We will do both. And we all draw on the collective expertise to make better choices. And we have a QR code. Thank you so much for your time.
Thank you. Thank you, Cara, for sharing your insight.
Thank you, Shalu. I really appreciate this. And please, let's have some more wine. But thank you again for your time. And I really appreciate you all being here.